There's a dozen stocks on my watch list under $2 a share. All of them are up 50% day over day. Tomorrow they could be up another 50%.
I'd love to wrap up with a little bit of Q&A. I'll let Tim pick. So if you don't get picked, don't get mad at me. But if you get picked, I'll give you a copy of Tim's book, An American Hedge Fund. Great book, wild journey. This is actually how I found Tim. Don't throw the book. God, that could hurt someone.
No injuries!
I hope they all sign the release.
Be careful! Be careful!
I
usually have a t-shirt gun. I usually have
I gotta say five. All right, I got five. These are the questions. Five questions.
Sorry.
Now they gotta be a good question. Goddamn. If they're not a good question, you don't get the book.
Okay, ask you a question. Who's got a question? Got a question here?
You're on. Repeat the question. That's a good
So
question.
the question is, how do you, determine if a stock is worth buying based on the news? Is that, there's different catalysts, right? So I have a few different strategies that have worked over the years. For me, I'll give you one example. It's not actually in favor right now, but it's a strategy that will come back again and again called billionaire plays. When a billionaire invests in a penny stock, why would a billionaire invest in a penny stock? Billionaires can invest in anything. So when a billionaire invests in a penny stock, usually it starts to run maybe 50 or 100% on that news, but it usually also runs for several days or weeks afterwards because it's basically like that billionaire has done all the vetting for you, right? The billionaire probably has some good analysts.
You don't get to be a billionaire by being stupid.
Yeah,
Is the idea.
but it also depends on the billionaire. If it's just like some trust fund baby who's like, doesn't know stuff, like that might not be a good billionaire. But like Carl Icahn, I remember, invested in a penny stock. The stock went from 1 to 2. It doesn't even matter the company. The stock went from 1 to 2, was up 100%. I bought it. And everyone's like, why are you buying the stock? It just doubled. And I said, Carl Icahn is an icon. He's not just a normal billionaire. He's actually a fantastic investor, great track record. So the stock was up. I sold it the next day. I think I made like 30% because it kept going. 2 weeks later, it went from 2 to 20. So the Bloomberg, Motley Fool, Seeking Alpha, Yahoo Finance, all of them wrote about it when it was like at $5, $7, $10.
See, and that's what's great about that billionaire play is because the quote unquote real media will pick up on that.
Because the real media, hedge funds, analysts, they don't care about low price stocks. So when it's so low priced, they're not looking at it. So even though the news came out, the press release is public. I'm not guessing if Carl Icahn invested. He definitely invested, but he wasn't interviewed for another week. And that's a good example of the inefficiency with penny stocks. Most people just don't care. So you have several days. That's a great example. I mean, it doesn't always go from 2 to 20, but that's the kind of thing that I look for, where there's an informational inefficiency where the media or other investors or social media now will really spike the stock
That's
in the coming days.
Social media is this stuff can ignite even faster. I think, again, the spread of social is why we've seen the volume come in penny stocks. Because now, it used to be we were in these Yahoo Finance message boards, and now it's just everywhere. It's all over. It's Twitter, Facebook, everywhere.
We got a question over here. Give her a book. The question is how...
A book on using leverage?
How can she maximize...
Okay, all right, okay.
Don't use leverage.
Well, that's why I wasn't going to get the book.
No, she says maximize.
All right, fair enough.
This is the beautiful thing when you have a small account. Some of these stocks do go double, triple, quadruple in a day. So if I had a small account, let's say $500 or $1,000, I would use not all in, never go all in because you can be wrong in any stock. But if let's say I had a $1,000 account, I would put maybe $200 into one of these high flyers. If it has a good catalyst, if it has good news, if it's already run 50 to 100%, and I think it can run again. Put 200, try to make, let's say, 100, maybe $50, and then do that same kind of trade over and over again. And it's not going to happen very often because when you have a small account, you have to be very selective. You should not be trading every day. You should not go all in. But every now and then, especially right now, like in the past week, there's a dozen stocks on my watch list under $2 a share. All of them are up 50% day over day. Tomorrow they could be up another 50%.
And I think that's again why we're here with that small account. I mean, do not discount how rapidly you can grow an account $100, $150 at a time. You'd be blown away. I mean, you put together 5-6 strings of wins, and all of a sudden, you're up 50% on a $1,000 account.
And also for small accounts, it's not just buying breakouts or spikes, because a lot of those spikes fail. I also like dip buying morning panics on multi-week runners. So let's say a stock has gone from 1 to 7 every single day, going up like 50 cents, $1 a share. Oftentimes, when it moves too quickly, you'll have one morning of panics that's taking out all the stop losses. So if the stock goes from 1 to 8 in a few days, you get this quick morning panic only due to stop losses, not due to bad news, but it drops from, let's say, 8 to 5. You buy 100 shares at 5, put in $500, and sell it in the bounce at 6 or 650, make 100 or 150 on a $500 investment. If you wait for those kinds of setups, they come around often. So the question is, I have a good track record, I have a good personality, I have a big belly, so should I start another hedge fund? No, I really enjoy teaching. I really enjoy, seeing what's possible, because frankly, this strategy is not very scalable. So I had a hedge fund, I had a few $1 million under management, I could make a few $100,000 a year. I lost basically a third of it trying to invest in a company where I believed in the technology on my own best lesson. I really like this. I can say whatever I want. If I was in the hedge fund world, I probably wouldn't even raise money, because they would look back at one of my YouTube videos and be like, we're not giving this guy money. I've said a lot of crazy over the years. I'm not running for politics or hedge funds anymore. I love the freedom of teaching, and I love that, most people don't care about anybody with $500 or $1,000 or $2,000 to their name. This kind of, democratizes Wall Street and finance, because this is a strategy that should be used for small accounts. And it's my honor to try to, teach you.
And I think that, I know everybody wants to be like start their own hedge fund and stuff, but the great thing about trading your own money is it's your own money. Good question.
Good question. So, the press release is out, the stock has already started spiking. How do you know if you're chasing or if it's a good time to get in? I really like buying in the afternoon on day one when it breaks the morning high. Because oftentimes you'll get a press release pre-market or the night before, and you get the initial spike with people really excited about it, but a lot of penny stocks have that initial spike and then they just fade all day. So I'm impressed if a stock spikes in the morning, then kind of holds, consolidates below that high, and then in the afternoon you get that push above the morning high. And ideally, if that resistance level from the morning is also like 3-month resistance or like 2-year resistance, and it becomes a multi-week or multi-month breakout. Oftentimes you have multiple resistance levels breaking on high volume with the catalyst on the first green day. So that's my kind of ideal trade. And in my video lesson library, I have hundreds of those kinds of trades where I wait. I also sometimes, you buy a breakout and you think it's going to keep going, and then you run into a brick wall. So I might have to cut losses quickly. I'm never too confident in any trade to say this trade is definitely going to make it. I just don't believe in that. So I want to see a breakout. I want the stock to prove itself, and then I might invest my time and money.
So before the last question, one thing I do want to bring up, and make sure it's a good question, last one. So Tim actually mentors thousands of traders in the Millionaire Challenge program. I also do a lot of mentoring. Too slow. Your grip is too much using that mouse.
Keep going.
Anyway, I also do twice daily webinars in Stocks to Trade Pro, where I mentor a very small group of traders. Tim and I love what we do, love teaching everyone, and that's why we're here. I mean, we're here to help you guys get better and ideally achieve the type of freedom we had.
So long story short, how corrupt are penny stocks? Everyone is in on it. And I'm not going to be called in like a court of law, like, who knows what's provable or what's not. But again, if you just think, why would someone invest in a pump and dump? Like maybe they're shorting the stock. There's some legality questions where you're investing in a company and you're shorting it at the same time. That's kind of questionable, but maybe it's not your own firm that's shorting the stock. Maybe you have a fraternity brother that you went to college with, so you do the toxic financing on a stock that's gone from 1 to 8, and you do the financing at 4, and you tell your friend who you went to Yale or Harvard with, and they're shorting the stock at 8, and then when you announce the transaction, it goes from 8 to 4, and your buddy gives you a little bonus of a Bugatti. I don't know. There's a lot of crazy stuff that goes on. I don't care about, what's illegal or what's, I just accept Once you accept the worst case scenario, just assume everyone is guilty, literally. And I say this kind of seriously though, like assume that everyone is in on it. You don't know who is or who isn't. Like if you hold a gun to their head, they'll probably still deny it. You know, the CEO or CFO of Bear Stearns, the day before they went bankrupt, they were on CNBC. Somebody asked, how's your company? And they're like, oh, it's fine. Next day, bankrupt. Right? So you just can't. And that was a big company.
That was some 2 million float stock with a $10 million market cap.
So all of Wall Street, from the management to the analysts to the newsletters, they're all kind of just cheerleaders trying to make money from people like you, average investors, average traders, squeezing a little money here or there. And that's how banking is such a big business. So how do you fight back? You have to learn to take advantage of the inefficiencies where you can. You're not going to be able to figure out the whole story. So for me, I like to focus on probabilities and patterns where I see it happening again and again, specifically in low price stocks, because a lot of the biggest banks, the biggest traders, the smartest people don't go down here. You know, if I make $5,000 in a day, I'm very happy. If one of my students makes $5,000 in a day, they're very happy. People on Wall Street laugh at that number. They literally laugh. So it's just, understanding the whole range of, different players in this game, where $5,000 to me or you is fantastic. I grew up middle class. $5,000 goes a long way. But a lot of these big wigs on Wall Street, like even if a company is valued at, let's say, $200 million, a lot of money, that's a small cap stock on Wall Street. That's a tiny company. Most hedge funds will not deal with a $200 million company. So it's just kind of understanding how crazy big this industry is, and then kind of picking your fights, picking your battles selectively.